Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning September 26th. Well, the big events this week are more political than economic. Monday night U.S. time, Tuesday morning GMT, the world will be treated to the first of 3 U.S. presidential debates, as former First Lady, Senator, and U.S. Secretary of State Hillary Clinton debates with building magnate Donald Trump. These two people couldn't be more different. Clinton's been at the center of world politics since she became First Lady in 1993, and she knows policy inside and out. Trump, on the other hand, appears to have almost no knowledge of current issues or events. But he's proven himself to be a genius in deflecting questions and attacking his opponents in an entertaining fashion. Now, both sides will be trying to convince the people in the middle who are still undecided. The stakes are very high. The polls give Clinton only a small advantage over Trump right now. If it appears that Trump may win, the dollar is likely to tank, in my view, but the Mexican peso is likely to tank even faster. That's the main way people are playing the election right now. The other major event this week is the informal OPEC meeting in Algiers. All the oil ministers will be in town for an oil industry conference, and they'll hold an informal meeting after the conference. That informal meeting could turn into an extraordinary OPEC meeting and make any decisions official. But reports on Friday that Iran is refusing to freeze its output makes it unlikely that they can reach any agreement. Oil prices, of course, and the oil currencies, such as the Canadian dollar, are likely to respond to any news out of Algeria. The EU data this week starts off today with the IFO index, which is expected to be little changed. Then on Thursday we get German unemployment and CPI. As usual, the next day is the EU-wide CPI. Now, inflation in both Germany and the EU is expected to accelerate somewhat. That could take some pressure off of the ECB and therefore be positive for the euro. The U.S. indicators coming out this week include consumer confidence on Tuesday, the always disappointing durable goods orders on Wednesday, final estimate of second quarter GDP on Thursday, and personal income and spending on Friday, which I think that's the key one. Both income and spending are expected to post slower growth than in the previous month. That could be negative for the dollar. The usual end-of-month wave of indicators comes out from Japan, including their wide variety of inflation measures, most of which are headed in the wrong direction. But it's not clear what the Bank of Japan is likely to do in response. Nonetheless, a further fall in the CPI, which is what's expected, may be negative for the yen. Now, Sunday night GMT, next Monday morning Japan time, the Bank of Japan releases its quarterly Tankan report. That's expected to show current conditions for large manufacturers staying the same for the third quarter in a row, but expectations are for a slight improvement in the coming quarter. No big change either way, maybe neutral for the yen. Finally, Caixin Market released their China manufacturing PMI on Friday, while the national authorities will release the official PMIs for China on Saturday. Both of the manufacturing PMIs are expected to improve marginally. That may help global risk sentiment and put a bid on stock markets and the Australian and New Zealand dollars next Monday morning. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.